So if you recently started a business or you're engaging in business activity and you haven't officially registered your business, when do you actually start collecting tax or filing your taxes for business? Well, for starters, those are two different things. The first thing, collecting tax on sales, that's one thing. The other thing, paying income tax on business revenue is another thing, and I'm going to address both in this video. So for starters, again, if you have a business or you're engaging in business activity, when do you actually start collecting sales tax on those sales? And the answer is it depends, because it depends on your region. Certain regions have different forms of sales tax that you have to collect. Some regions maybe don't have sales tax, at least on some goods or services. Some might have multiple, so that is an important factor. Now, beyond region, it can depend on the type of product or service that you're offering, because some services are exempt from having to collect sales taxes in certain regions and other ones aren't. So that's another thing to consider. But I did have this question come up recently, and this is why I wanted to address it a little bit more. So besides the region you're operating in, the products and services that you're offering, is it when you get a business license? Is it when you officially register your business? Is it when you reach a certain dollar value of sales? And again, it depends. This is where I need to work one-on-one with a client because of those things, because it's region specific, it's industry specific. There are different rules for different businesses. However, it's not tied to getting a business license, because when you get a business license, typically that's through your city, and that really has nothing to do with collecting sales tax for your business. And it's not even necessarily when you register your business with a corporate registry. You might actually be required to start collecting sales tax even before you register your business, or even if you don't register your business. Is it when you actually sign up for a tax account? Again, it depends, because sometimes, especially here in Canada, you might actually have to start collecting sales tax before you even set up a tax account like a GST account, or a provincial sales tax account like a PST account. Or is it when you reach a certain dollar value of sales? Yes, sometimes in the case of like GST, for example, in Canada, that's typically the case, but not always. So unfortunately, there's not an easy answer to this as to when you start collecting sales tax for business activity from your customers and clients, because as I mentioned, it does depend so much on the region you're operating, the industry you're in, the products and services you're offering, how much money you're making, what the rules are, things like that. So I need to work one-on-one with a client to determine that, but it is something to be aware of, because you don't want to run into penalties where you were supposed to be charging a provincial or a federal sales tax and you weren't. And now in terms of when do you actually start paying income tax on your revenue from your business? Well, again, that depends on the region. Are you operating in the US or Canada or Mexico or somewhere in Europe? That depends. But typically the way it works is if you're operating your business just as an unincorporated business, then typically that income from the business is just part of your personal tax return. So you would just follow like the standard January to December tax year and then just include that business revenue on your personal tax return. Whereas if you incorporate your business, a corporation is kind of a separate legal entity. It's kind of like creating another human that has a separate bank account and separate tax accounts and separate tax filing and things like that. So if that's the case, then you're gonna have to file a corporate tax return, and the revenue for the business is part of that corporate tax return and doesn't necessarily impact your personal tax return. It depends on how you set things up, if you're paying yourself as an employee or as an owner in dividends or whatever it may be. So again, a difficult question to answer, but it depends, as I said, on all those different factors. But you want to make sure that you're getting advice from the right people, reaching out to different organizations, especially governing bodies that, collect the taxes and have requirements for collecting and paying taxes, so that you don't run into issues. Because I've seen that before with businesses that are not properly collecting taxes on sales or not properly filing their income taxes. And that can not only create issues with your business, but that can also create some personal financial burdens and difficulties as well. So if you have started a business recently, or you're planning on starting a business and you're not really sure how to navigate that, feel free to reach out to myself, especially if you're in Canada, and I can help navigate that a little bit. Or if you have an accountant that they can most likely help you navigate that as well. It's always good to reach out for help for something like that, because again, you don't really want to run into issues, and it's better just to get it right from the start. So hopefully this video was helpful, not too confusing. Again, it's a very nuanced topic. So if you found the video useful, please click like. And if you want to check out my channel, I have currently over 170 videos that cover business startup and business management topics.